United States, despite its warnings to other nations about the risks of Chinese state bank loans, has been the largest recipient of such loans, according to a recent report. This revelation raises concerns about the security and technology implications of these loans, which have been kept secret due to their secretive nature. China's state lenders have provided over $200 billion in loans to US businesses over the past 25 years, often through shell companies in tax havens like the Cayman Islands and Bermuda. The loans have been used to help Chinese companies acquire stakes in US businesses, particularly those in critical technology and national security sectors, such as robotics, semiconductors, and biotech. The report highlights a more extensive and sophisticated lending network than previously thought, extending beyond developing countries to rich nations like the UK, Germany, Australia, and the Netherlands. This has raised concerns that China is gaining control over technologies crucial to the US economy, potentially impacting national security. The US has been warning about China's predatory lending practices for over a decade, but the irony of being the largest recipient of these loans has only recently been exposed. The report's findings suggest a shift in the use of state credit from promoting economic development to gaining geo-economic advantages, raising global concerns about China's efforts to control economic choke points. The US has been tightening scrutiny of foreign investments, but China has also improved its lending practices by setting up banks and branches overseas, further complicating the origins of the money. Chinese state bank financing has been linked to projects across the US, particularly in critical high-tech industries. The report highlights several examples of Chinese state-owned banks providing loans to Chinese businesses for acquiring US companies, including a robotics equipment company in Michigan and a US insurer with clients from the CIA and FBI. These deals have raised concerns about the Chinese government's access to sensitive information and its strategic goals. The report's findings emphasize the need for better transparency and scrutiny of Chinese state lending to protect national security and economic interests.